Our next panelist needs no introduction, Mr. Rajiv Hira. He's a high-caliber strategic tax and finance professional, experience of leading roles in private and multinational financial institutions for over 25 years. His expertise ranges from risk management, compliance, investment analysis, to taxation advisory, VAT advisory, and management consultation being his core competency. Welcome, Mr. Rajiv.
I'll split this into two portions. Point number one, TFS is much more easy to comply for because there is no gray answer there. If you find someone in the list, stop. That's very simple. So if I say, looking at a money laundering space, it's much more complicated because you are trailing out the transaction. You're looking at so many things to get an answer from. From a targeted financial sanction perspective, you find that person in the list, full stop. And authorities are given very clear indication what need to be done for a TFS transactions. That's one part. Second is PF, which is proliferation financing, which is becoming little more complicated. As Mr. Bindra said, this is applicable to all industries. So it's not only for DNFPB. If you are dealing in any product, so if you go to the TFS website, you will find all the HS codes and all the products listing itself, which can be used as a dual use products. So if you are dealing in any product, I'm not talking here only DNFPB, it can be a client level, it can be a business, pure business also, where the product can be used under the mass destruction definition. That means maybe in the nuclear weapon or something which can be used as a weapons of mass destruction. I think PF is something which is quite huge and need to be looked in a complete detailed way. You need to have an understanding of what product they use, what can be the end use of that product, and those questions are not only applicable for DNFPB, definitely auditors and accountants are supposed to see where those PF items are getting used. But it's more important even for the companies which are trading or manufacturing those products, where the end product is using. And I'll give a little more twist on this. So as a developer, you are appointing real estate brokers to deal on behalf of you. That means sell and buy property. So there is a process of vendor empanelment. During the vendor empanelment, are you verifying your brokers are complying to UAE law or not? That's the first question comes into play. So if, example, as a developer, I'm hiring 2 or 4 brokers, I need to understand from a country regulation perspective what those brokers are supposed to do, if not as a developer also. So that's the first part. So when you do vendor empanelment and you make sure that the broking firms who are accepting or receiving 55,000 plus of cash, virtual currency, or something which is converted from a virtual currency kind of a transaction, what mechanism they have of reporting. So I'll just say a very simple checklist. Ask for their manual, ask for whether they are GoML compliant or not, ask for whether they have a compliance officer and undergone the training which is supposed to be done. So that's the first part comes into play. Second thing, from a transaction perspective, this is an asset which you are selling. So as we talked about from a TFS perspective, not on a 55,000 reporting perspective, you are not a broker activity. You are only selling and buying your own property. You may not get directly attracted to this transaction requirement, but if you are doing any broking activity of any third-party transactions, you will get attracted. Whether you do it 1 transaction, 2 transaction, does not make a difference. So both angles need to be looked at. Point number 1, from your vendor empanelment perspective. Point number 2, at your own due diligence, because you are selling your own asset. So if that person is listed in the terrorist financing list, there is a problem. Whether regulation is saying something directly to be deployed by the developer or not, there is definitely a compliance requirement to ensure that you are not dealing with someone and something which you know is wrong. So we cannot say that as a developer, I can take 1 million dirham because I'm doing a direct transaction. Fine, regulation is not stopping anywhere, but the suspicious reporting is happening and your auditor will ask questions to you as a developer also. So all those angles need to be looked at. It's not a straight through answer on how and what. So from a UAE perspective, they have listed down all the list which we are supposed to look at. So that's first part. Second part, they expect us to look at adverse media also. The list is a finite one. So that means, as I said, there is no gray listing over there. It's a black and white. If name is there in the list, stop. But the second portion comes from a due diligence perspective, whether he's a PEP or adverse media, both. Both does not stop us to do a business with them, but they are forcing us to do enhanced due diligence that why those adverse media actions are there against that person. Adverse media can be as simple as he was as a civil offense or something where his name was wrongly or rightly quoted. Or it can be as complicated as enforcement has raided his house. So looking at the case level, we need to understand and look at what more requirement or what more questions we need to ask. Because we are making that person as a member of our family. Either we provide them audit services, account services, or we open up a bank account, whichever side we are making that person as a part of the family. So do we make anyone as a part of a family who has some issues? So that question comes back to, I'll not say that all adverse media are wrong, but we need to do some kind of enhanced due diligence to see what can be looked at. I was coming to that point only. So I think let's look at what UA is there now, right? Under invoicing, over invoicing, there is a cash element either at the origin stage or at the destination stage. If you do over invoicing or under invoicing, either you are paying cash or you are receiving cash. So there is an element which is there, definitely. Now, let's look at what UA regulations say. I always start talking about, let's connect the dots. Are my custom documents and VAT documents are aligned? First question. Second, is my ESR reporting aligned if it's a related party transaction? We all are accountant and auditor, and now I'm not talking bankers. They are not able to pick up those points, so just keep quiet on that. So I'm saying, so are we connecting all the three dots, VAT, customs, and economic substance reporting? If all these dots are being connected, you will find the gap. And as an auditor and accountant, if you see from auditor perspective, all these sections are part of the audit obligation. So that gives an answer of whether it's right or wrong. We are not getting into right, wrong. And even from a banker perspective, if I just now touch across, bankers are looking at the custom document very carefully. They are looking at and they're matching the shipping records very effectively. They're still not able to get VAT versus custom story because from a regulator perspective also there is no one-to-one transaction mapping. But as an auditor accountant, we are able to get that access much faster and much easier. So I'm saying if you put up all these frames together, FIs, DNFPB, we are making their life, traders' life, not easy to operate into.